If you're drowning in credit card debt, don't skip this video. Do not do it to yourself because we're going to go into how credit card debt actually becomes your path to financial freedom. Almost every video on credit card debt tells you the same thing. Get rid of it. That's not wrong, it's incomplete. And what follows is the actual two-step process where the same tool that traps most people becomes the tool that funds their next move. So the standard advice, what the standard advice gets right, give the standard advice its due. If your credit card debt came from things that lost value the moment you bought them, compounding against you at 20%, that's a real trap. Getting out of that is the right move. Nothing here changes that part. Revolving debt on depreciating things, funding purchases that lose value keeps you permanently stuck, high interest compounding monthly, 20+% interest working against you every month is a genuine financial trap. And the right call, if that's your situation, getting out of it is correct, full stop. However, the missing piece and what it misses. Here's what the standard advice misses. Not all debt behaves the same. A 0% introductory period on a card isn't debt working against you. For that window, it's free capital essentially. The real fix isn't getting to zero debt, it's changing which side of the debt you're standing on. So not all debt is equal. Debt at 0% and debt at 24% are fundamentally different instruments. 0%, an introductory period, isn't debt working against you. It's a window of leverage if you get into a deal, acquire a business, or scale a business. Change sides. The goal isn't zero debt, it's standing on the right side of it and actually getting a return on that capital that's better than the 0% you're transitioning into. So rapid gap funding is step one. What is it? Unsecured term loans, no lien, no collateral, funds arriving in 1 to 3 days, fast, clean capital with no strings attached to your assets and no early pay down penalty. So what it does, this single round clears the high interest balances that were costing you money every single month. And if you came for a deal, a down payment, a business acquisition, this same round funds that as well at the same time. It clears high interest card balances, fund real estate deals or business deals simultaneously, no lien, no collateral, and no equity given up. What step one does to your credit file? So clearing those balances drops your utilization. We want to get below 30% utilization, and utilization alone makes up roughly 30% of your FICO score. This is the moment the debt stops costing you and starts working in your favor. So 30% of your FICO score, utilization is the one single largest lever to pull to increase your score, and we're going to see a 40 to 80 point gain. If you go from 80% utilization down to 30, a single reporting cycle can move your score this much after clearing balances. And it's one reporting cycle. That's all it takes for improvement to register on your file. That could be as soon as 1 day to 30 days, within a month, I'll say. Step two, 0% credit card stacking. The improved file coming out of step one typically clears the 700 threshold these lenders require if you've got no other negatives on your file. Unlocking a 0% introductory rate of 12 to 21 months. Secret here is you can do a double stack. So 5 to 6 personal, 5 to 6 business. The personal cards work on your personal score, thickening the file, while the business cards you can max out in the deals because they're not reporting utilization to your personal FICO. The file improves. Step one clears utilization, pushing your score past the 700 threshold. 0% unlocked. Lenders approved 12 to 21 months of interest-free capital, deployed on purpose, the exact tool that once trapped people, now used with a plan behind it. So the whole argument in 2 steps. We call it rapid gap funding. Clear high interest debt quickly, 0% credit card stacking follows to access free capital for 12 to 21 months. Step one takes debt that was costing you and clears it. Step two takes that same category of tool and turns it into capital that costs you nothing for well over a year. That's the entire distinction between debt that traps you and debt that builds you. Done in sequence, not as a slogan. Now, discipline required, the part I will not skip over no matter what you ask of me. Step one only works if you don't quietly refill the same balance the same way once it's cleared. The round clears the debt, your habits have to keep it clear. Step two is for deals and deliberate moves. Not everyday spending, not buying a car. Skip the discipline and you haven't built anything. You've just reset the clock on the same problem and dug yourself further into the hole. The strategy and why the order is the whole point. Try to jump straight to step two before your file's improved, and the number you get approved for usually comes back capped or even fully declined. Doing step one first is what makes step two actually deliver. So step one first, clear balances, drop utilization, push your score past 700 threshold. lenders require, and it also frees up monthly cash flow. Then step 2, with an improved file, you unlock real 0% capital, not a capped offer you'd have gotten applying cold. The order isn't a suggestion, the order is the entire strategy. So, real example, we do this every day of the week. 80% of our clients go through this startup method. What this actually looks like. So, illustratively, 75K comes in through step 1, 25K of that clears the existing card debt. 50K left over funds the deal itself, whether it's a business acquisition, a fix and flip, getting into an Airbnb, or even just scaling a startup where you're not in business 2 years to actually get a business line of credit or business term loan. So the score improves, cash flow opens up, one reporting cycle passes, and step 2 comes back weeks later with real 0% capital to go again. So 70K in, total step 1 funding arrives in days, no collateral required. 25K of that will clear the debt. High interest card balances are eliminated in one move. 50K of it funds the deal, down payment gap or business acquisition covered simultaneously, and then 0% capital returns weeks later. Step 2 delivers real capital, not a capped offer. So how we help, what we structure for you. This is exactly what we build for people starting this process. Step 1 structured right, build to clear debt and fund your deal simultaneously, not one or the other. That's the rapid gap funding. Step 2, the credit card stacking, sequence precisely, time to land after your score improvement has actually reported to lenders. Straight talk. If discipline, not strategy, is your real gap, we'll tell you that directly. Ready to see your numbers. If you want to see what these 2 steps could actually look like with your specific situation, book a call and we'll map it out with you directly. Head over to gapfunded.com/apply, link in the description below, and we'll walk through step 1, step 2, and exactly what the sequence looks like for your deal. So you've got to have a plan to actually spend this capital where you get a better return than the debt itself.